Hi everyone, Spiros Vasilakos here, and thank you for tuning into this special podcast. Today's topic is the 6 most overlooked tax deductions. Look, who among us wants to pay the IRS more taxes than we have to? While few people actually raise their hands, Americans regularly overpay because they fail to take tax deductions from which they're eligible for. So let's take a quick look at the 6 most overlooked opportunities to manage your tax bill. 1. Reinvested dividends. When your mutual fund pays you a dividend or a capital gains distribution, that income becomes a taxable event, unless the funds are actually held in a tax-deferred account like an IRA. If you're like many mutual fund owners, you're actually reinvesting those dividends and purchasing additional shares within the mutual fund. Keep in mind, the tax trap does lurk when you actually sell your mutual fund. And if you fail to add the reinvested amount back into the investment's cost basis, it can actually result in a double taxation for those dividends. 2. Job hunting costs. A tough job market may mean you're looking far and wide for employment. The cost of the search, transportation, food, lodging for overnight stays, cab fare, personal car use, and even printing of resumes may be considered tax-deductible expenses, provided that the search is not for your first job. 3. Out-of-pocket charitable costs. It's not just the cash donations that are deductible. If you donate goods or the use of your personal car for charitable work or charitable events, these are potential tax deductions. Just be sure to get a receipt for anything above the amount of $250. 4. State taxes. Did you owe state taxes when you actually filed your previous year's tax returns? If you did, do not forget to include this payment as a tax deduction on your current year's tax returns. Keep in mind, the Tax Cut and Jobs Act of 2017 placed a $10,000 cap on the state and local tax deduction. 5. Medicare premiums. If you're self-employed and you're not covered by an employer plan or a spouse's plan, you may be eligible to deduct premiums paid for Medicare Part B and D, Medigap insurance, and Medicare Advantage plans. This deduction is available regardless of whether you actually itemize the deductions or not. 6. Most important, income in respect to a decedent. Let's just say you actually inherited an IRA or a pension. You actually may be eligible to deduct any estate tax paid by the IRA owner from the taxes due on the withdrawals you've actually taken from the inherited account. Again, ladies and gentlemen, keep in mind, the information is not intended as tax or legal advice. Please make sure you consult with a legal or tax professional for specific information regarding your individual situation. Again, if you would like to schedule a personal consultation or you'd like some more information, please visit athenianprivateclientgroup.com, or you can actually call me and I would love to talk to you. Thank you again. Stay tuned. Keep moving forward towards financial independence, and I truly look forward to seeing you again on my next podcast. Have a great day.